What's going on, everybody? It's your boy JT, and we are back to the Crypto Den. I want to thank you all for tuning in. Today, we have another exciting topic, as always, okay, in the Crypto Den. We talk about crypto, right? That's what this ridiculous looking basement is for. And today, we're going to talk about an exciting topic, as always. It is the inflation and its correlation to investing in crypto. Now, before we get into that, just so you know that I know what I'm talking about, my name is Jake Tullis. I go by JT, and I run a digital asset hedge fund called Bleeding Edge Capital out of Cincinnati, Ohio. We are a discretionarily long hedge fund, meaning I think in months, quarters, years, decades, not hours, minutes, days. Like, don't really care. I care more about the long term trajectory of this asset class. When in doubt, zoom out. That is my phrase. Um, and I do this leveraging my 10 plus years of software development experience. So I take a unique perspective and I do a ground up research approach where we analyze the networks, the business of this software, and lots of fun stuff like that. So we go through the fundamentals here. You can consider it like value investing or if Warren Buffett was interested in crypto. So today, we're going to be talking about macro. We're going to be talking about the impact of inflation. And I want to unpack that word inflation so we know what we're talking about. Inflation just means that the money supply is getting more saturated. Or another way to explain it would be if I just had this one pen and this was the only pen in the world, it would be far more valuable compared to having 50 trillion pens out there in the world. And if we used pens as a currency, the difference between one pen, maybe one pen is worth $50 trillion versus one pen, 50 trillion pens, and each one is worth $1. So if I was to buy something in the latter example, it would take way more pens to buy it than if there was less pens. It's the same exact concept with dollars. Okay, so inflation is referring to this concept that the money supply is expanding at a specific percent. And it compounds like anything else in investing. So if we're going 2% a year, well, 50 years from now, we go from 800 billion to 50 trillion. And that's basically how it's played out. I have a really nice picture to show you that just in the past, what is this, 11 years? So since 2014, the level of increase to money supply. And we're not just going to be talking about America's inflation. We're talking about global inflation. Now, global inflation is monitored or summarized as global M2 money supply. I just did a podcast episode talking about this, but there's a few different schedules or types of money. There's M1, which is dollars or inflation being released, dollars flooding the market directly from the Fed. And then there's M2, which is the money that is quote unquote washed by the banks, meaning they take that new money, the M1, and then they use it to loan it out to businesses, people, cars, like all the debt we use to finance our lives. That is M2. When you look at M2, you have a dramatic increase. And this is inflation, okay? What I'm about to show you, right? This pink line is M2. That's 59 trillion back in May of 13, okay? And now it is at 107. So M2 has doubled, completely doubled. And that is in what, 12 years it's doubled? Now, the white line, now this is where we tie the topics together. Now that you understand inflation and you see what they're doing. This is the globe. This is not America. Okay. if we look at, and actually, I want to show you real quick, that brings up a good point. Our friend Fred, this is the Federal Reserve database here. I'll go look at America's M2. So 21 trillion, we'll round that up. 21.8, we'll round that up to 22 trillion. Okay, so 22 trillion out of 107. So America is roughly 1/5 of the entire money supply in the world out of 200 something countries, which is really important to know. And that's also why everyone cares what America does. Not only is it a fifth of all the money in the world, it's also used in most of the trade, plus 60% of global trade. And when people sell their products to America in dollars, that means we are printing money, giving it to people to then import their goods. And then when they make a profit off our consumerism, they invest back into America through securities and debt instruments. And that's what's basically kept money going for so long, in America at least. That's really the only country that has that luxury. Now look at this global expansion of M2, this huge mountain here. That is the COVID response, right? And if you look at the correlation between M2 and Bitcoin price, right? We're talking about how inflation affects cryptocurrency investing. Well, Bitcoin matters the most because when we look at the entire market, Bitcoin is 63.7%. The total market cap is 3.2 trillion. Bitcoin is literally 2/3 of it. So Bitcoin's price drives the entire cryptocurrency market. And you can see it has a very strong correlation to inflation. I mean, just this little peek up here, right? Bitcoin, this is the belly of the bear market. Bitcoin's at 19,000. M2 was trending down. And then right about here, we go from 103 trillion to M2 to 105 by this time. Bitcoin went, so $2 trillion added to the world, $2 trillion of inflation. We remember the pink line's M2. We print all this money. And then you can see Bitcoin responding much later. M2 was printed 97 up to 104. That's a better mark. 97 up to 104, roughly. And Bitcoin goes from 15,000 to 72,000. And M2 just stayed stagnant and even went down a little. And then that final leg up, 101 to 105, it went back up. And generally speaking, M2 is a leading indicator. So inflation is a leading indicator to Bitcoin price. This little spike up from 102, 105, I'm sorry, what is this? 105 trillion up to 107 trillion. This $2 trillion added right here could drive Bitcoin price higher. I mean, there's a 95 something percent correlation, right? And you got fear at 50. People are not that bullish. It's right down the middle. So the main point I want you to walk away from this video is if you hear anyone in any country talking about cutting their rates, adding programs, basically the government expanding their responsibilities monetarily, meaning they're going to print money. Anytime you hear someone talking about printing money or raising the deficit or anything like that, that is bullish for Bitcoin. We've not had the altcoin rally, So I don't know if it's bullish for everything in crypto, but for Bitcoin, it is very bullish. And you got to look 3 months in the rears to really understand where Bitcoin's going next quarter and the following quarter. And we keep having quantitative easing. We keep having countries print money and flood the system. And if that continues, Bitcoin will keep going up. And that's how inflation affects crypto, guys. That's it. Hopefully you learned something. If you like these topics, make sure you like, subscribe, comment, let me know. And if you have a specific topic you want me to bring to you all, just reach out. I love engaging with you guys. Thank you so much for the support. We're almost at 2,000 subs. It's wonderful. And hopefully I can provide some value to you all. And hopefully you can check out my fund. We've done very well. I navigate these waters very well. I'm very excited for the future. And hopefully you are too. All right. Until next time, take care of one another. Peace and love. I'll see you.